Hello guys, welcome back to my channel. I am with the resolution topic. This is one of the favorite questions of the examiner regarding resolution. Here what we are given in this question, there are few assets which are taken over by the partners or they have been realized at some different value and part is realized in a different pattern. So here we need to calculate the adjustments for the same. So first of all, in dissolution, I have already told you that our question would start from the balance sheet. To score good marks, what is required? Two things. First of all, you need to read the question carefully every time. Once you start reading the question, analyze the points given in the given point, right? And second is the practice. When you keep on reading, doing the questions again and again, it's going to help you in the final presentation. So let's go over here. With XYZ are the partners, and here we need to prepare the necessary ledger accounts. So in the books of the firm, we have to prepare for the dissolution is realization account, partners capital account, and also the last is bank account. The dissolution starts from the balance sheet. In the balance sheet, I am provided with the capital of the three partners that will go to the capital account by balance brought down with rupees 1,27,500, 1,10,000 and 17,000 rupees only. These are the balances of the partners over here, which we took at one place. The balance sheet items will go at one place only. So we placed it. Then is the loan. Nothing is mentioned that whose loan it is. That means it is an outsider party's loan. So it should be transferred to your realization account credit side by loan account. I have already discussed in the last videos that all existing liabilities would be transferred to realizations credit side so that on the dissolution we can make them payment. So all the payments are to be made through realization. That's why liabilities have been transferred to the realization account. Now coming to the asset side, there are other sundry assets. You need to write over here one time asset heading, and then you will write other sundry assets, furniture, debtor and stock. Whatever assets were given to me, we place them on the debit side here. Now other sundry assets were with 1,17,000, furniture was 11,000, debtors I took with the full value, that is 1,24,200. Provision would be the first item on your credit side of the realization account. By provision for bad and doubtful debts would be the first item, that is with rupees 1,200. That's why on the debit side I took the debtors with the full value, right? So debtors are here, their provision is there, and then stock was 17,800. So we placed all the assets here except cash balance. Cash balance would go to your bank. So here it is cash balance, that is 13,200. Here one single account is prepared for the cash and bank transactions, that is bank account. We transfer our cash balance to this account. So making the total of the assets over here, what total exactly we get is, that is rupees 1,17,000 plus 11,000 plus 1,24,200 and then 17,000. We got exactly 2,70,000 balance here, right? So this whole balance is transferred over here. Now we are done with our balance sheet. In the dissolution, we firstly started with the balance sheet. Place whole of the balance sheet here. Now we have to do our adjustments. First, X is to take over the furniture at rupees 8,000. Now furniture is going out from the business, so furniture should be credited. But now furniture can't be credited with the word furniture because we have transferred the furniture to realization account. So asset moving out would be transferred to which account? That is realization account here. Credit what goes out through realization account. Now who is taking, who is the receiver? That is S is the receiver. So X capital account debit to realization account. Journal is not asked, but to get you understand, I am placing it over here that whose account is to be debited X and what account is to be credited realization. That means what? All the assets realized would go on the credit side of realization account. So credit side, because X was taking what name we mentioned over here, that is X capital account with the word furniture that he took for 8,000 rupees, right? So here debtors amounting 1,20,000, we took at what value? 1,17,200. So we will record it with the taken up value, right? So here the sundry assets, these were debtors, sorry. So these were debtors which he took for 1,17,200. Always realizable value is recorded for the asset sold or asset taken over by the partner. So here we got a total of 1,25,200 from here. And he also said that the same partner X is to take over creditors of 16,000 which he would pay himself, right? So X has to make a payment of a liability. When liabilities are paid off, which account is debited? Realization. If they are paid, then it should go with the bank. Now, who is making payment? That is a partner. So, which account would be credited? That is X capital account. Who is taking the responsibility of making the payment of your creditor? That is with rupees 16,000, that is X. 16,000 creditors were taken over by X. Asset realized on credit and liability to be taken over on debit. Now, I have told you all the adjustments would go at the two places. So, X capital here would be transferred to X capital opposite to realization account. How much amount is to be transferred here? Total 1,25,200, right? Now X capital account is here. By realization account, how much amount is to be transferred? That is 16,000. So first point is done. We recorded only the realized value here. Then Y is to take over all the stock for rupees 17,000. Now Y is taking over the assets. So assets taken over are credited in your realization account. Y is taking over the stock at a valuation of 17,000. We portray the amount here. Some sundry asset at 72,000. Realizable value of the assets is 72,000. So sundry assets taken over by him were at 72,000. So the total here is 89,000. Now Y's capital would be transferred for realization. We have already written realization account. So amount is transferred to the opposite case, right? Then the point is ended over here. Then he says, although it is mentioned that being it is 10% less than the book value, but I am concerned here only with the realized value. So I recorded the realized value. Then he is to say the Z is to take over all the remaining sundry assets. Now remaining sundry assets, I should know that what book value of assets have been taken over by Y. What was the total value of sundry assets? They were with 1,17,000, right? And some of the sundry assets were taken over by Y. What is the Y's book value of sundry asset which he took over? That is to be deducted from the actual value. But here, when he says that is to take over remaining sundry asset at 80% of the book value, how to find out the book value which he is left with? So to calculate that, when he says that Y is taking 72,000 rupees of asset at 10% less than the book value, if book value, how to calculate firstly? What is written over here? Take it percentage. If book value is 100, percentage means 100. Then he took how much less? Less he took with 10. So at what value Y took over the asset was 90. What value Y took over the asset? That is at 90. So what is the 90 value? What is the realizable value for the asset is 72,000. Now we need the book value of the asset. How to calculate? Cross multiply. So 72,000. I not need now this 10. Right? How I have to calculate this? For 100 I don't know the book value. For 90 I know the value is 72,000. So 72,000 into 100 divided by 90. This is the 80,000 book value of the asset taken over by Y. From here we get 80,000 rupees. Now, so what is the leftover value of the asset? That is rupees 37,000. The leftover value of the asset which Z is to take over, that is 37,000 rupees. And Z has to take this 37,000 asset at 80%. So book values 80% gives me the valuation over here, that is 29,600. So Z is to take over the sundry assets. By Z's capital account, sundry assets which he took over at 29,600, book values 80% valuation. And he also assumed the responsibility of discharge of the loan with interest. So here he promised to pay, or he is to pay the loan amount along with the interest. What was the loan amount? 11,500. What is the interest amount? He says 2,300. How much total payment he has to make? 13,800. Okay, so now Z's capital would go with realization 13,800. Z's capital with realization goes 29,600. Opposites are transferred. So this point is also done. Last point, expenses of realization were 2,700. Okay, so how to make the expenses of realization? That is through bank account. Realization expenses of 2,700 rupees. They have been paid through bank. We will take it to which account? Bank account. By realization account, opposite side, that realization expenses were paid with rupees 2,700. And the leftover point is remaining debtors were sold at a debt collecting agency with 50% of the book value. Now he is saying remaining debtor. What does remaining debtor meant over here? Total debtors were 1,24,200. How much valuation of debtors is taken up by X? X took over at 1,17,200. This was the realizable value. What is the book value? 1,20,000. From the book value, we will deduct the book value. Realizable value goes to realization account. Realizable value goes to realization account. But from the book value of total asset, the book value of taken over asset is deducted. Now the book value of the debtors was 1,24,200. At what book value they took over the asset? 1,20,000. X took over the debtor. What was the leftover value of your debtors? That was 4,200. And they have been sold to debt collecting agency. That means an agency who will help me to collect the money from these debtors at 50% valuation. How much they are paying me? 2,100. So what is the realized value of debtors here is 2,100 rupees. 50% of the remaining debtors. So in this point, we were provided with the book value of debtors taken over, but here we were not provided with the book value, so we calculated it. So now, when I am done with the debtors point, I have to shift it to which account? Realization account. Here it goes like debtor, so 2100. These all points are done now. You have once to check that your liabilities are paid, provision is not a liability, loan is paid, creditors are also paid. It is done. Now assets, other assets were also sold, furniture was also sold, debtor was also sold, and the stock was also sold. So all the liabilities have been paid off and all the assets have realized. Now we need to calculate the profit or loss from the account. So what is the profit or loss from the account? We will be making the totals over here. Here the total of realization account is 3,25,000, from which we deducted the credit side. So we got a loss over here for rupees 27,900. So here is the loss, 27,900 loss. How it is calculated? Making a debit total, deducting from here is the credit total. And after that, if you are left for the value on the credit side, then it is a loss. If you are left out the value on the debit side, then it is a profit. So now, when we transferred this loan loss to X, Y and Z, the ratio was 2 to 1 in the question. So this loss is transferred to 2 and 1. So 1160 is the loss of X and then of Y would be the same, and the last party the loss was 5580. The loss value is transferred here. So double entry is completed here for the loss transfer. Now we will take the calculation for the credit calculation, that is 1,43,500 total credit for your X account, and then we take it for Y, that is 1,10,000. When we deducted whatever transfers were there, whatever balance would be left would be transferred to bank account, because here business is going to shut down. So the business value left over here is 7,140 for the case of the X, and for Y this valuation is with rupees 9,840. But for Z, the total of the debit side is more as compared to the credit side. So for Z we are getting bank value on which side? That is your credit side. So what is the value in the Z's account? The value is 4,380. So these are the balancing figures which we took from here. These would be transferred to the bank account on the opposite cases. X and Y's capital account are given a credit because they had a debit balance here. So 7140 and 9840. And now for this version, that is Z, we have to transfer it to the debit of the bank account for its credit balance. So what is the total of the account here is, bank account is 19,680, 19,680 on the both sides. So my debit is equals to credit. So my question is completed here. So that is how, this is the very much important question. The adjustments over here have been done in the points for you. If any query, you can kindly put the same in the comment box. Thanks for the day. Accountitude, like, share and subscribe. Keep scoring.